So the biggest name in healthcare as a dividend, as a healthcare payer is UnitedHealthcare. And these guys are a health insurance company, $470 billion market cap. It went down 6% today. They announced in their top line revenue didn't grow as fast as investors would have liked. It grew at 8%, which is very good considering they're so big. But other fundamentals kind of lagged, so investors sold off the stock. This company, there's no way to avoid it. I think they're still dealing with just the horrible situation with their CEO got assassinated. That was just terrible, and it's got to just have a huge effect on the company. So hopefully they can get back on track and things get back to normal for them. This company, according to analysts, is discounted and is a strong buy. I've owned UnitedHealthcare for years, sold it and switched over to Elevance, but just have a lot of respect for the company. For the past year, the stock hasn't worked a whole lot. It started to really go down when the CEO got assassinated, which is really, really sad. And we'll see. I think this stock's just a necessity, and I think it will be back. It will be back. The company is growing their revenues. They grew 8% for the trailing 12 months. That's great growth considering that their revenues are $400 billion. At 8%, that's $32 billion of growth. That's awesome. And they drive a lot of free cash flow. That's why they're so valuable. This is why I use cash flow. Is you look at all the most expensive companies on the stock market, and they all generate free cash flow. So that's why I use free cash flow as my valuation foundation for stocks. And this one here, I owned UnitedHealthcare up until 22, and then decided to move to a different stock. And I'm glad that I own them. I made good money with them, and moved on to Elevance. So that's UnitedHealthcare. Analysts really like the company. Just fundamentally, it's a really valuable business. And looks like 19 analysts are weighing in on price targets. And on average, they believe this stock is discounted by 21%. So UnitedHealthcare, let's take a look at their revenue growth. It's expected that they continue to grow. In 2025, it's expected they're going to grow by 11.4%, and 6.6%, 7.5%, which is good for such a big business. And earnings per share will expand. So those things look good. And one of the things, with these big market caps, it's always, investing is an art and a science. In my analysis of UnitedHealthcare is how much higher can that market cap get? So that's why I really question that. And I go to a different player that's doing, really well. And if I look at fundamentally, they're probably discounted better, and that's in Elevance. And I invest in Elevance, which is in the same space, but not as big as UnitedHealthcare. Elevance is only $89 billion in market cap, so just a fraction of them. They are big. They're not quite as big as UnitedHealthcare, but they're about 40% the size, but only less than 25% the market cap. So you can see that you're getting more revenue for the market cap. And the PE is much lower. Forward PE is much lower. Discounts available on Elevance are much better. So Elevance is going to be the stock for me. It's also sold off recently, providing a nice opportunity to buy shares. And so far this year, it's doing okay, up 4.43%. Went down today, 1%. That's not bad. UnitedHealthcare went down 6%. These guys only went down 1%. So not bad, not bad. This is a stock that I want to continue to own, and we'll continue to buy shares. Now's a good time to buy these shares. Elevance at a discount. I think they're 90% discounted because they produce a lot of free cash. And these guys, they fill a need that we have to have. Healthcare payers are a necessity. So I'm going to keep buying Elevance. I think this one's going to do well over the next 2 to 4 years. And at some point, I imagine I'll probably want to sell out of Elevance. But for now, I am a long-term investor in Elevance. I really like the discount that's offered up to me based on their free cash flows and their earnings per share projections. Speaking of which, let's take a look at their growth rate. What do analysts think about their growth? Elevance is going to keep growing 7.6%, 7.5%, and almost 10% in 2027. They're going to expand their earnings per share nicely. And their PE is going to continue to drop unless their stock price goes up. So a growing business that's really profitable, generating free cash flow, PE cannot be single digit. Not in my book. But I'm just one investor. We'll see if other investors agree with me and start buying into the stock. For now, I will buy it at a discount that I believe is a good opportunity. And when it starts to rally, I'll be glad I did so. So that is Elevance. The other stock that's caught in healthcare that has been beaten down is CVS. Ouch, down 32%. Just has been beaten down. But look at this. It's getting back up. It got knocked out, but it's picking itself up and it's fighting back. So $65 billion market cap. This is a huge company. Forward P is only 9. Strong buy, 33%. I believe they're discounted. They are growing their business. And they have a business that's a combination of a retail business through their pharmacies, healthcare services, as well as they're a healthcare payer. And they generate free cash flow. And overall, I just think they're really, really discounted. The worst price target out there is $58 and the stock's trading at 52. So just consistently, other analysts are agreeing, hey, this stock's discounted. It's just a matter of the market didn't like healthcare in 24, didn't like it very much in 23. It's been selling off these stocks, but these stocks continue to perform, grow their businesses. In the case of CVS, it's growing its top line revenue. It is expanding its margins, expanding its net income, earnings per share, and just has an outrageously low price to earnings based on the fact that they're growing, they're profitable, generating free cash flow. So I'm glad to see CVS is going places in 2025. Hopefully it keeps going, catches the attention of other investors, jump into CVS, jump into Elevance, make those stocks go up. That'd be great. And it'd be great for value investors who catch these stocks at a discount and see them go up.